Hey, and welcome back to Financial Reactions. Today we're going to take a look at the weekly payers in the dividend portfolio. If you could do me a huge favor before we get started, go ahead and hit that like and subscribe, and let's get into it. All right, so Rex shares, how have they been doing? Looks like we only have a couple winners. CWII and LLII are the two. HOII has fallen off, and NVII has also fallen off a little. Those two used to be a little more towards the green and or closer to even, but as you can see, they've taken a dive. Let's see how the winner is, and its price is starting to stable. It's had the little drop, and I'm guessing, yep, 10 cents. These seem to be about in that ballpark, and that's consistent. Yep, 10, 11, 9. So 10 cents is a good average for the CWII. And as you can see, the whole portfolio is down a little. Roundhill is doing good. It's in the green. And we have ARMW. Now this one, I believe, was on a hot streak. Yep, it was. As you can see, it got up to 96, and now it's back down to 69. So that's the one I told you. Some of these that, if one is screaming hot, you might want to be careful before you get in at a high price. Luckily, we started this back here in March when it was down here, which is why it's showing such a profit. And it's paying a good dividend. You see the dividend still up at 161%. Let's take a quick peek at what the dividend actually was. 216. So that was a very nice dividend. And that's probably a little high. Yeah. You see, when the price was lower, it was down in the 60, and then the price shot up, and so did the dividend. But if you're losing, $8, $10 a week in share price, the $2 dividend isn't going to keep up. That, like I said, that is the problem with the weeklies, is if they get hot and they go up and down, you're going to not hold your NAV values very well. So let's find one that's been holding a little better. So this one, HOOW, you can see it's in it's an average cost of $26.58, and it's up to 28. It's getting a 90% return on the dividend. So let's take a peek at that one. It's 49 cents on a $28 stock or ETF. And 49 cents is a little on the high side. As you can see, that price has been creeping up, and so is the dividend. It did have this huge drop off last week. It was down to 19 from 51, but then it shot back up. So maybe they just had had a bad week with their covered calls. Those things do happen. As you can see, this one is a little more up and down, so there's not a whole lot of consistency on that one. AAPW 36, 36. So this is a price even one. So we're not getting a lot of return, and it's a 34%. So 9 cents. Kind of low. As you can see, it was up in the 20s, and now it's tailing off. So that's something you got to keep an eye on that one. Yield Max Group 1. Portfolio had a little jump. I think Chippy went on a run. Yeah, see, it's up from 57 to 81. So let's take a peek at that one, see what the dividend is. 78 cents. It's kind of expecting a little higher. Let's see if that's about in the ballpark. So it is in the ballpark, and it is creeping up. With the way the price has gone up, I would have thought they could have maybe got a little bit better on the dividend, but not so. Yield Max AI and Technology, GPTY, is up from 38 average to 44, so that one's getting good, and it's also a 35% return. QDTY is the NASDAQ, and 39 to 41, so that's not getting a lot of share prices or Yeah, the price of the ETF isn't going up. It's kind of steady, and it's still putting out a 32% return. Uh, what what are we doing out down at the bottom? This is the shorts, and obviously if the stock market goes up, when you short the market when it's going up, you're not going to do as well. Some of these you can see, this one is YMAX. This is one of the old holdovers from the monthly. Let's take a peek at its price. It has been trickling down, a little bit of stability through here. Dividend, 8 cents on a $7 stock, so that's fine. 71%. So if you hold that, I mean, if you get it now, you're going to get that 8-10 cents a week. As long as the price doesn't go any lower, that one will actually be, not bad. Let's go to group 2. You can see this one has a big hit overall, and that's because most of these are in the red. Don't forget, we started with $10,000, so if the value is still above 10,000, we are not negative as far as initial investment. But every time you get a dividend payment and they reinvest that money on a decreasing share price, it'll show up as a negative. But like I said, you're still over your 10,000, so you still have your initial investment, even on some of these down here. And some of these down here, you have lost considerable, like Misty. Misty was the golden child of YieldMax when they were doing the monthlies, and then that one has gone through the reverse split, and it's just tanked again, which is too bad because I was kind of hoping Misty would hold on and come back. It's kind of up and down, and look at that. It's down to 19 cents from the 30s up to 50. Yeah, poor Misty. I used to like that one. I'm glad I got out of that before the reverse split. When it started dropping, I got out a long time ago. AMDY, that one had the huge run up in price, and it's held its price better than some of the others that had a good run up, because you see this was a really nice run up. So if you got this back in March when we started this tracker, you've done well. Let's see, its dividend is up to 88 cents. So 63%. Having a slow internet moment. Sorry about that. I'll have to edit this out. There it goes. 88 cents. And okay, so it's been in the 90s and 80s. So 88 cents is about in line. It did get up over $1 for a couple of weeks, but I don't know that I would grab this one right now, the AMDY, because of the fact that it's shot up. It might hold, it might not, but that's these that don't hold their value. I would take something like Morrow if you haven't done weeklies. If you look, this one has a good return. It's 181%, and it's been in the 570 to 6, so the price has stabilized. It dropped from its, the 16, but look how long it's been steady. So if you've had this whole time, even though you're not getting a share return, that dividend is really starting to add up. If you're going to double your money every year, there's nothing wrong with that. This one is consistently in around the 10 to 12 cent range. The lowest was 9 and got up to 14. So for disclosure, I currently hold this one, and I am buying more shares through covered calls in my personal portfolio also in this one. I like it because it's stable and it pays a good percentage on the dividend return. And at $6 a share, it's not a huge share or, huge cost if you want to try this one yourself. Anything else we can look at? Let's go something about it. Winter. So this is, see, had an 84-cent, 58-cent dividend, and it's in the 86%. Now, it has lost on the share price, and it's on an uptick on the dividend payment. So, dividend payment going up, the price of the ETF is coming down a little, so you're going to be getting more shares every time you buy. And what was the long term on this dividend? Wow, this has been really up and down. So that's to be, look at that. You're still off your high, but it's on an uptick. So that's something to consider. Defiance is down. We have 4 in the green, so that's not bad. And all of them are above your initial investment of $10,000. So you would not have lost if you had mirrored any of these. What are we doing here? We're up a little bit on the price and the dividend of 32 cents on a $18 ETF. So that's okay. 19%, 30% seems to be in order. So that one is got some really stability in its dividend payment. Any of the others, 14 cents. And yeah, look at that consistency. So the Defiance seem to be holding their dividend consistency payment. Yep, 11 cents, 12 cents. So that would be considered, this is some stability. If you just watch if the price is ticking up and you're going to get a steady dividend in the 40%, 30% range, that's something to consider. Granite shares, these are the ones that I'm not going to waste time on. As you can see, they're all down. Even the AMYY is still losing. They had the reverse split on some of these, and you can see they just this whole group of Granite shares, I'm staying away from them. If you find something you like about them, that's on you. And if you do, hey, if you know something I don't know about these, let me know in the comments, because I cannot even online find a whole lot of good news on them. So that's it for the weeklies. Thanks for joining me today. I'm going to get the covered call video up also. Thanks for joining me, and we'll see you in the next video.